Khemani joins in to talk about his take on the markets and a whole host of sectors. Vikas, hi, good morning. I guess we hit 17K, almost 17,100 now. That kept you a little late?
No, I think the market always surprises you, right? And it always does well on the wall of worry. So, which is what is precisely happening. I think so. Most of the hikes are behind. I think as we are sensing that inflation trajectory seems to be sort of getting down with commodity prices coming back. So I guess that's a much more comforting situation. And as far as India is concerned, most of the drivers of growth are intact. I think the concerns around the global macros was clouding the market in last couple of months, which seems to be receding. And I guess over next couple of months it will become a lot more clearer. The only thing I think one needs to watch out is the impact of the withdrawal of $90 billion a month as it starts happening in next month. So that probably might have to be just watched out. But good part and comforting part is that inflation trajectory is coming down, and the comment from Fed chairman that recession is right now at least not visible. So I guess to that extent, market will get comfortable. The oversold situation will get corrected, but not that I don't think the worries are behind and the markets will resume the bull market back. I guess it will just consolidate here. But as far as India is concerned, I think all the indicators are in the right place.
Because I'm guessing then you're not too perturbed about what the RBI is going to do come next week on Friday when the MPC meeting does conclude. The market is, of course, pricing in a 35 bips hike. But in light of what the Fed did with the 75 bips move, are you worried at all about what the commentary from the central bank is going to be or even the quantum of the hike?
So if you see, read in between the lines from the RBI government's comment in Singapore recently he made, I think he laid out pretty much his thought process very clearly. He's getting comfortable around inflation. He's getting comfortable around. I mean, he will do whatever it takes to support orderly movement of rupee. Growth is continues to remain pro growth. So I think all the comforting statements you made regarding, I mean, policy rate hike, I guess by and large, markets work on based on how much is factored in versus the surprise factor. I don't think if 35 basis is kind of expected, if that happens, there will be anything negative from a market point of view. And I think as the inflation worries kind of settles down, which we will know more and more clear in next 3 6 months. Path is right now definitely good. So I don't think RBI is going to preempt when the direction is right, surprise market with a very aggressive beyond 25, 35 basis point kind of raise.
Right. One is about rates. Second, what do you make of the overall earnings? There are a lot of misses as well, but there are a lot of hits as well in the overall scheme of things.
Absolutely. I think I see more positives coming out of the earnings cycle. If you look at, I think banking sector by and large, which is the largest sector, has delivered pretty well. And growth and outlook continues to remain positive. Automobiles have kind of done well and continues to remain positive outlook on that. IT again, from this quarter perspective, there are worries about the future demand, but the numbers have been by and large pretty robust, including the order wins. Then the only thing I think probably commodity size, which is expected, you can see a bit of a disappointment. But by and large, I don't think if I look at the macro level, there are many disappointments, and in an environment like this, it is bound to happen because it's a very volatile environment. That there will be businesses will suffer, there will be businesses will grow. But if I were to look at the overall index or market level earnings trajectory, we are I think on course. And as these macro uncertainty, volatility around the commodity prices, supply chain issues settles down, India will do well. So I mean, we continue to maintain that in last even through the volatility that this will be the best time to invest because from a 3 to 5 year perspective, India is one of the best story around the globe. I see FI flows resuming back once the rate cycle gets done. So I expect in 2023 we will see massive flows coming from even foreigners. So this could be a very good time to sort of deploy capital because India's story remains intact and also it benefits from what's happening around the globe, whether it is China plus one or disruptions happening in Europe because of the availability of energy. So it all India benefits from most of the disruptions happening around. So I think net we remain quite sort of positive on India overall.
Should you play this positivity? US, as you're saying, India remains the best place. Should one look at the domestic stories more now rather than the exports or the overall IT names or companies that are directly linked to US growth or some of the other global geographies?
So well, it's not either or. Definitely India's story. India is fastest growing economy. It will remain for a long period of time. So domestic story, of course, you have to play out. But one more very big leg of India's story or India growth story is building exports or reducing imports. And in that sort of category, especially in the manufacturing space, there's a very big opportunity. We've been outlining that for last almost 18 to 20 months. That India is making leapfrogging on the manufacturing progress, which historically has been a very weak point. So as our manufacturing GDP, which is around 16, 17%, will go towards 20, 22% kind of range over the next 5, 7 years. As this growth happens, you will see massive opportunities coming out, both within the export as well as import substitution. And global growth does not worry on this because India is gaining market share. So even if global growth were to slow down because of China plus one, the market share gain itself will sort of help us meet our growth targets, as well as import substitution. There's no sort of threat because government is providing lots of comforting so to say protection, tariff and non-tariff, to make sure that domestic industry flourishes and does not face any unfair competition from dumping from anywhere else.
Good morning. So tell us more about that. How exactly are you playing that theme? Give us ideas. If you want to give stock specific, nothing more like it. You said you've been playing on this strategy now for close to 9 months.
I think so. We have a strategy which has been around since October 20 rather, so almost close to a little less than 2 years. So again, this spans across various segments. It is there into API, specialty chemical, auto hangs. Is there in the garments space. Is there into consumer electronics manufacturing. Is there into defense item. It's there into toy manufacturing, footwear manufacturing. So there are lots of areas sort of emerging. See, please understand, our entire consumption or large part of our consumption was met through imports, especially when it comes to manufactured goods. And all of that is, or most of it is set to reverse. It's not that India could not manufacture that earlier, but it's just that India faced unfair competition from our neighboring country and who were subsidizing their exports. Now India is promoting the same thing and wanting to replace that. And secondly, India's cost competitiveness vis-a-vis China has improved significantly. Our labor cost is $200. China's labor cost is $800. Our power costs have come down, or more or less the same at par with China. So and we're getting better on the logistics cost side. So all those things are working also in favor of India. And this will and these kind of trends do tend to play out on a long period of time. In some sense, I see sort of mini IT kind of big trend playing out in manufacturing over next 5, 7 years, because these drivers are not temporary. They are structural in nature, and these kind of structural change tend to last over 5, 10, 15 years.
So Vikas, tell me something. What have you used the recent dips to buy? I remember once you told us it was JK paper. So last time round, that's what you spoke about. What did you use the recent correction to buy?
I think we did increase our banking exposure. We are very optimistic about BFSI as a space over next 24 months because growth is coming about. Asset quality issues are behind. Marginally rising interest rate helps the banking sector. So we are quite sort of optimistic about banking as a sector. So we have increased our portfolios there. We have added a few names. Where we can see both not only earnings growth but also valuation rating over next 2 to 3 years. We have also added automobiles, where we think that again it's coming out of a low base. There's a lot of pent up demand, and chip supply shortage will sort of ease out in our opinion in next 3 to 6 months. So the growth profile of this entire sector, which has been otherwise very sort of lackluster last 3, 4 years, nothing has happened. So that sector can sort of do well. These are the two new changes or kind of shifts we made in our portfolio. Otherwise, broadly, by and large, I think our story remains same.
Because I'm intrigued to know what is it that you're doing with this so-called newly listed universe, which is not so newly listed. They've completed 1 year. The lock-in period is ending. We've already seen what's happened to Zomato. Chintan is going the same way today. Do any of them come close to being at value zone or not? I know just because they've corrected is not a good way of looking at it. But they are businesses which have like duopoly or even monopolies in some of the sectors that they're in.
A very good question, and I'm sure a lot of people are grappling with that. In my opinion, most of the businesses, all they call new tech businesses, don't have business model. Or the business model as they are considered duopoly or competition free is not so. I think they themselves are facing disruptions from many other quarters. Secondly, I think even if at a corrected valuation, you don't think anywhere close to sort of meaningful opportunity according to me. Like let's take the example of Zomato. It's the largest player in the country. You charge, I think you can't increase prices anymore. So you charge almost close to 25%. You charge delivery. And despite that, and this kind of penetration, if you can't make money, then when will you make money? So point is that then how does one value company? So if you are monopoly or duopoly, some point in time you should make money, right? So when will business model turn profitable? Currently no visibility. So point is that one has to understand that initial part I can understand, but some point in time after so many years in the business, when you get such a large market share, the profitable visibility has to be there. If it's not there, then how do you value such companies? So I think whatever froth was there was a FOMO. I mean, if you remember, we had a chat around our note called fad, FOMO, fade. So there was a fad, then we saw FOMO, which is fading away. So and I maintain that many of companies which went public over the next 5 years, many of them may not be even listed. We have seen this cycle many times over in the past. We keep evaluating. It's not that we are blind to new opportunity. Disruptions is here to stay, but in the name of disruption, you just can't, buy anything and pay anything. And that was precisely what was happening. People who did not understand business models also bought without understanding the price and all. People bought Paytm at 3,000 rupees in private market before it went public. So it was clearly sign of FOMO. To that, excesses have got corrected, but we still don't think many of the businesses are still in the value zone where you can confidently play out saying that this is now here, going to create wealth from here over the next 3-5 years. And secondly, once the momentum is lost, it takes very very long time and serious amount of reimagining of the business to gain the momentum back.
Sure.
And all these businesses have lost momentum. The appeal has gone away around those businesses. So they have to really come back with different proposition or a different growth profile to look at them differently, which I think is right some time away.
Trust has been shattered, not just broken. But Vikas, always great to have you on the show. I can see you're working from home, so enjoy the weekend.
Thank you very much.